Welcome to Charts Today. My name's David Linton, and today's edition for Monday the 23rd comes to you from Cowes on the Isle of Wight. I'm working from home. I've been self-isolating now for over a week. I did catch the virus. Luckily, I had quite mild symptoms, and thank you to all of you who've sent your best wishes. I've been absolutely fine, but of course, it's the worry about giving it to anyone who's old or vulnerable, just hoping that any of you out there have got to listening to this and not in a dire situation with loved ones. So we start by looking at the markets. We see a sea of red this morning. Before I go there, I want to perhaps look at the just the coronavirus charts. I do this from a spreadsheet into Updata. I prefer using it in Updata than Excel because I can manipulate the data more easily. So here I've got two charts, one zoomed in, one zoomed out. This is from day one of the first death. So it's a way of just setting everything back to Italy's first day, and so we see here Italy 5,476 deaths, unfortunately a terrible number, and we're seeing Spain actually running ahead of Italy at a faster trajectory, so that's pretty worrying for Spain at the moment. We're seeing UK and France. Fairly morbid thing to be looking at, but really it's just to give an idea of how the different countries in Europe are faring. And here we see the US. Wouldn't be surprised with a larger population to see that chart coming up as well. But for the moment, Europe is in a dire situation with these charts. That has then led me to do some other things. I post these on LinkedIn all the time. If you want to follow me on LinkedIn, you can simply add me, and all of these charts get comments. I've got several thousand followers on LinkedIn, and I'm pretty active there during the week, so quite a good place to follow me if you want. So here we see what I've done here is this is a weekly chart of the Dow Jones Index, and I've taken the previous downturns, big bear markets, and I've just literally moved the trend lines across, recolored them, saved this chart. So this is a chart that I can keep referring to. So here we see that 2008-9 looked like this. That would mean July next year. And we've got quite a bit further to fall on the Dow. That would be 13,000. We're sitting at 19,000 at the moment. So again on LinkedIn, I've had various comments. Some people saying we're going to this one, others saying it looks more like this. Some people saying it's just 1987. I'd say it's fairly ambitious, and that it would be just 1987, and that we suddenly would bounce and start rebuilding. What is likely to happen is that we'll see some recoveries, fall down, recovery, fall down, recovery, fall down. It's just, do we go to here? Do we go to here? Is it like 2000 and 2003, long, slow pain? Don't know the answer, but this is a chart that I will keep watching. Now back to markets. The dollar is resurgent, looking very strong. We've got these big upside targets, 20-50% on the dollar. I've been a long-term dollar bull for a long time, and this is now starting to come to play. We saw a massive week last week on the dollar at the breakout there. So dollar strength is very much a theme. That means, of course, Eurodollar is weak. The euro hitting new lows. We've got big downside targets. This one given way back in 2008-9, 75 cents the euro would be worth. And these targets now looking like they're coming into play. For the moment, 102, 104, 105, parity is where we're gunning for at the moment. Looking at the Japanese yen, we're seeing here that we're also just looking stronger against that dollar. The yen being a safe haven in times of crisis, of course, but the dollar did resurge even against the yen last week. Sterling looking weaker. We were at 130 not only a couple of weeks ago. We're sitting at 115 this morning. So sterling now breaking to new lows. Looking back to the 1980s, 108 was the level. We're sitting with targets now 104, 110, even targets to parity. So the sterling chart looking very bearish against the dollar. Those targets that have been there for years now starting to come to play, and the same with the euro. We're seeing that as well. Sterling looking weaker here, although it just has a little bit of a bounce this morning. but we do have downside targets, and sterling the weaker chart against the Swiss franc sitting at 114. Again, we've come from 132 at the end of last year to 114, so sitting lower here as well. Bitcoin sold off very heavily over the last couple of weeks. We seem to have found support at around the $5,000 mark. We're back to 5,800, but we now are bearish, medium, and short term. Remembering this is my long term, my medium term, and my short term charts at the bottom. But Bitcoin bearish. The S&P 500 index was down 4% on Friday. That's hitting new lows, of course. Downside targets to 15%. These are the numbers that matter. The long-term targets are now being met. That's bearish confirmation. We now have to look to the shorter term targets on the 60-minute charts, and we've got targets 15% lower. On the NASDAQ, 14 to 16%, so we might as well say 15% lower there as well. On the Dow, we're seeing targets 16, 17% lower, so that's further to fall. The Russell 2000 actually managed to hold up on Friday, but we are seeing here we had a terrible week, and we've got downside potential to some 17, 20% lower on the Russell. This is gone from 1,700 to 1,000 points in a matter of weeks, so really quite scary. The futures this morning, the S&P future is down 2.8%, so we're set to open lower in the US. The NASDAQ future down 2%, and if we look at European markets this morning, the FTSE down 4%. We've fallen from 7,700 to under 5,000. We're through that 5,000 level now on the FTSE. Really critical psychological level broken. FTSE 250 is down 4.5%. That's fared worse than the FTSE. The smaller cap companies or the medium caps falling much further. 22,000 down to under 13,000. Really big falls here, and big downside targets still to play for. Of course, the US markets will govern what the European markets do. If we saw a recovery in US equities, we'd see that in Europe as well. So that 15% downside number is really the number to remember. The DAX down 4%. The CAC 40 down 3%. Japan actually managed to close steady. That was the only market in Asia that did so. We see the Hang Seng was down 5%, the Chinese market was down 3%, and the Indian market, the Sensex, down a massive 13%, really tumbling there. So we've really seen across the board big falls, and the Aussie market was down 5.6%. Commodities wise, we've got Brent crude down just under 5% this morning, down 4.7%, sitting at 25.72. We have breached the 25 level last week. That's a psychologically important level for Brent, and WTI did temporarily breach $20. Brent WTI in the teens is not something that people would have talked about when we're in the high 60s just a month or so ago. So really falling lower there. US NatGas through the critically important $1.60 level. That was a long-term support level. So we're seeing gas prices that have held up pretty well so far. We're seeing gas prices falling away as well. Gold is down slightly, still holding on to its bullish. We bounced on the cloud on the weekly chart. We are bearish on the medium-term chart now and on the short-term, although we look like we might cross here. Gold has had this big sell-off, but we haven't negated this upside target. That's really significant. If we go below, though, that would be a different story for gold. We'd start to take targets off the chart. Of course, if we get another resurgent chart here, that's going to look pretty bullish. So gold is certainly one to watch. And it's one of the best looking bullish charts, of course. Silver, we are seeing, has been hit very hard, and that long-term chart is bearish, and US 10-year yields sitting much lower as well, and the German bond price bouncing last week, but really at them and just starting to turn bullish again, finding some support, but even bond yields bonds have been falling in this sell everything mentality. Just looking at some of the energy mix, a lot of my clients look at energy prices. Coal is still on a downtrend. We've got downside targets on coal to the low 50s. It's been in a downtrend forever, so really this crisis has just added to that. Emissions had a terrible week last week, really fell away very heavily. This is the daily chart on emissions and the 60-minute chart, and we've got targets 6% lower, and a massive target here that's not even, doesn't bear thinking about, but we are seeing there emissions falling heavily. UK gas, MBP down heavily as well, and TTF, the Dutch gas contract, also breaking lower. Gas has held up this sort of finding a floor, but it does look like it's now cracking and we're hitting new lows. So that consolidation pattern now setting up for another leg down. And last of all, we look at German power prices. Again, a lot of our clients looking at German power. 33.80, we've been giving that target for ages. That was given at the end of February, and that's where we've got to. These targets, you can't ignore them. We've got a new downside target here at 30 this morning on the 60-minute chart, and on the 1-minute chart, this is the chart to really watch. We've got 32.10 and 32.80, so 32 euros looks likely for German power. That's it for this week. Remember to stay safe and practice social distancing. If you're sitting at your screen, it's a pretty tough week to trade. And I'm afraid there's little respite in the market with the look of things at the moment. And of course, keep an eye on LinkedIn. Reports have gone out to clients this morning, so I've sent out my weekly reports to our corporate energy clients, so keep an eye on those as well. That's it for today. Until next time, stay safe. Bye for now.